Welcome to Financial Planning Explained. I'm your host, Mike Menninger, certified financial planner, owner and founder of Menninger & Associates Financial Planning. I'm pleased again to have the second of two episodes with Joe Trave, who's the owner of Village Handcrafted Cabinetry. Joe, thank you for joining me again. This first episode was just absolutely terrific. And if we had time available, I would love to do more, but we don't. So we're going to jump around again a little bit and talk about the different areas of financial planning that are directed a little bit to the business owner, which there's no separation between the business and the individual, because you as the individual are reaping all the profits of the business that you have a lot more control over, as opposed to just a regular salaried stiff, so to speak. But I want to talk about investment planning, okay? I know that investing in your business, and it's like, to me, because we're a service organization, investing in my business is investing in the people. For you, you pointed out, you've got people, you've got machinery, and you've got obviously the building. What have you found in your 25 or 26 years? What have you found to be where you have to really invest? And what has been the best return of investment between all these different things?
Okay, so in 2020, we moved from our old building to our current building. And I'm not so sure that we'll be there forever, right? I mean, we're gonna max out at about 75,000, maybe 85,000 square feet. But as my business grows, space, imagine building cabinets. When you take a flat stack of lumber, as soon as you put it together as a box, it's now 3 times the size.
Correct.
Right? So literally it's like the game that these kids play, Minecraft. So you're building these boxes and like eventually they're up to the ceiling. So, and the key is throughput. So we have invested heavily on space, infrastructure of that space. So imagine dust collection alone could be $1 million, right? So we need to make sure that the dust, the environment for these 100 amazing craftspeople is safe, it's clean, the air is clean, right? Wood can be called a carcinogen, so we want to have ambient dust in that air.
Of course.
Exhausted properly, lighting, just everything you can imagine for that space has to be thought about. We use our factory as a sales tool. So when clients come in from all over the country, we not only show them our experience center, but we walk them through the factory.
Yep.
We want them to understand what they're buying and see that craftsman building a cabinet that's going to be in their home for the next 50 years, right? And see the quality. And that's really part of our sales pitch. So a clean factory is indicative of the way you're going to take care of their space.
Without a doubt.
Okay.
Without a doubt.
So I am hypersensitive about every nuance. Like when I walked into your office, Michael.
With a disaster area.
No, stop.
Oh my goodness.
No, when I walk into your front door, it speaks of your company, right? So it's welcoming, it's clean. My name was on the iPad, right? These are the things I think about. How do I invest to make my clients feel like they are taken care of all the way along the way? So that's one. The next is equipment. That's the need. Obviously we need saws and CNC routers and finishing booths, and we have air systems to exhaust any type of fumes, right? So like in our finishing department, it's state of the art. We bring in fresh air at a faster rate than we exhaust. So that means that when they're spraying in a spray booth, the overspray that is not any particulates not going on the cabinet are going into a filter and then exhausted out, so they don't need to wear respirators. So, we're really big on that. How do our people feel in the space they're working? We want them to love working there, right? So we're building a culture. The team is just as critical as the equipment, right? If not more.
I would say
more, right? The equipment has to run, but you need that team to run it and understand how to run it, but really to enjoy doing it every day, because it's hard work, right? So, and we say, you guys are building heirloom work that might be on this earth for 200 or 300 years. This stuff's not just going to fall apart. right? It is built to last. So it's heirloom, quality, and they really get into it. And I'm passionate about it, and they're passionate about it. The other thing we've invested a lot in.
Do you have a showroom?
We do. Yep, we do, obviously. 5,000 square foot, we call it an experience center. You can come in, you can experience a kitchen, a family room, a library, a dining room, a bar, right? Every room of the home is in that space, so people can see it. Software is another big one, right? And now with AI integrating in as a software tool, we're trying to understand how do we process flow parts throughout our factory, right? It's your kitchen, if I'm building a kitchen for you, might have 20,000 parts, right? So if I have 25 kitchens going at any time, you can imagine there's hundreds of thousands of parts.
Yeah, absolutely.
So now we're looking at RFID tags. How do we tag products so that part doesn't get thrown on the floor and somebody can't find it?
Inventory management.
It's inventory management. So we're really investing into infrastructure. It's funny, I started with a table saw and a joiner and a bandsaw, like everybody in the garage. And now it's software. It's like, how do we track parts? We're looking at robotic carts now. The cost on robots is really coming down. So just to move parts from one area of the factory to another, how do we do that effectively? And there is a lack of labor source right now, right? So especially in the trades. The trades are really struggling for quality people right now. And we're going to the schools early. We're into the schools at 10th grade, 11th grade, trying to get tech schools, technical schools here in Montgomery County and Bucks County. So
good,
yeah,
good. Well, yeah, I mean, it's not just labor, good labor, and
right,
having them care and be proud of the workmanship that they do impacts the workmanship.
Absolutely.
And so I think that's great. So obviously, and it's the same with us, in order to be able to do work for our clients as a service organization, we need to be able to have real quality, intelligent, sharp people who understand and can pull it all together.
Correct.
So it works the same way.
And the challenge in our business is that the scalability, right? I'm trying to scale this company. This is now my job is how do I grow the company? And how do I used to design someone's kitchen. Now I'm designing how do we take the company from 15 or 20 million to 40 million,
right?
How do we do that? And how does everybody benefit from that in the company, right? And that really is the challenge. It's not, you just don't hire, so for every one kitchen you sell or one more kitchen, you just don't hire 3 people. It can't work like that because space doesn't allow for it.
I know.
So throughput becomes that issue. And how do we get the product through faster? We're looking at potentially, an acquisition of another company so we have more capacity. Rather than moving our factory, we're looking at maybe we acquire a competitor outside the region, and then we can run we have different lines of cabinetry. We have fully bespoke custom, and then we have some semi-custom that we manufacture as well. So maybe we take our semi-custom into another facility. So that's kind of my planning right now, what I'm doing.
Would it be local to your existing one or somewhere?
Possibly. Our business. Listen, the southeast of this country is blowing up, right? We see that, and
blowing up good.
Blowing up good. Yeah. I mean, Florida, that market, Florida, Georgia, they're just growing exponentially. So we see that shipping from Pennsylvania to Florida is expensive. So there might be a strategy that would say, hey, we're gonna have another facility down that way.
When you say it's blowing up, are you talking about blowing up from the manufacturer or blowing up from the consumer?
The consumer. The builders they can't, and the quality of work in those regions isn't quite what it is in the Northeast. The Northeast is known for quality craftsmanship.
Is it?
Right? Oh yeah. So Lancaster County is the cabinet making capital of the country, the whole country. Right here. Horse and buggy guys, that used to wear suspenders. That those days are kind of that's starting to phase out to some extent. But we're right on the tails of some of the top cabinet lines in the country, and I tell my staff, our goal is to be the best, not kind of the best, the best.
Yep.
Number one, right? So that's the goal.
That's a beautiful goal to have, and when you reach that and achieve that, if you're not there already, it is something that you are proud of yourself, and you can have all of your employees be proud of, because then they can
They're
go to
part
work
of that.
saying, I work for the #1 company in the country.
And that's how it's funny. The company's name is Village, but it truly does take a village, right? It takes these people that put their blood, sweat, and tears into this work, and I'm passionate about it, and they get passionate when they see my passion.
Yep.
Right. So I'm really passionate about when I bring a client through, and I'm like, look at what Bob is building right here. Look at this work. This is old school craftsmanship still, and people are like, wow, you actually make everything. I'm like, yes, because in the world of Amazon, they feel that they can press a button. People just, it just shows up at your front door. No, I bring them into the factory and they say, wow, this is made for me. My name is on the back of every cabinet.
Do you think automation is ever going to, it shouldn't have an impact on you, but I got to imagine that automation is.
Yes, automation is, that is something we're looking at. We want to, and we do automate. We have CNC routers, computer numeric controlled routers, similar to the stone business, that cut and process parts. But the craftspeople still do the real,
Yes.
technical thing. Automation is going to help move parts faster. It's going to get throughput through. So we believe in automation, and that is coming in our world. It's just like it did in the automotive industry, right, 30, 40 years ago. Robots taking a part, moving it from one area to the other. But it's still not a robot taking that dashboard and putting it into the car. That's still
right.
That's still human hands. And quite honestly, I don't see that changing. I don't see robots building these cabinets anytime soon. Maybe 25, 30 years from now. But
then you need somebody to build the robots.
Correct. Yeah, or program them.
So that's good. So from a tax perspective,
Sure.
and I know we had this discussion not only in the first episode, but before we even talked about it. What have you done to improve tax efficiency, or do you leave that to your accountants and leave it to your new CFO?
Yeah. So I'm involved in a group called the EPI, the Exit Planning Institute of Philadelphia.
Interesting.
I've been going there for the last 5 years. They have been instrumental it's a group of financial planners, private equity people, investment bankers, and business owners, really in a room that talk about how do I monetize my company over the long period of time? How do I eventually exit? So that has been my biggest I'd say change, that I started attending these events monthly, understanding that my business has value, right? And how do I strategize that value? How do I eventually retire? I don't have a ton of money in 401k, right? I never worked for anybody. I worked for myself. So I don't have this big nest egg, right? It's not, yes, I have a simple IRA, but the business, most of my net worth is in the company, right? So how do I use that and strategize that? So as I've been going to EPI, there's been this talk throughout most of the other CEOs saying, if you don't have a CFO or a certified financial planner that's helping you strategize your tax, you better go get one, right? And because your CPA, their job is to file your taxes, and they're going to say your tax bracket is 37%. Okay, keep writing your quarterlies, right? Whereas somebody like yourself could come in or work with a CFO, work with the CPA, and really say, all right, let's look at Joe's scenario with his wife. How can we optimize? How can we change the strategy? So, let's be honest, nobody wants to pay more taxes than they have to.
Of course not.
Right, okay. Yes, I agree that we need to take care of those that can't take care of themselves, but for the most part, I'm very conservative, and I believe that I want to mitigate my taxes.
Of course.
Yeah.
So you actually, is a nice lead in. We got to take a break in a moment, but we're going to talk about is, to your point, the Exit Planning Institute.
Okay.
Let's talk about exit planning and retirement planning as it pertains to a business owner.
Absolutely.
You and I can probably talk for 3 hours
I'm sure we
on
could.
the topic.
Yep.
So stay tuned. We'll be back with you in just a few moments.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Menninger, founder of Menninger & Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going, because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Planning Explained, and we're in our final segment with Joe Trave. This is absolutely fantastic. He's the owner of Village Woodcraft Cabinetry. Handcrafted, sorry.
It's all good.
I did this really badly with
That's
my
fine.
last guest that I had on there.
That's
I
fine.
was blowing his, anyway, be that as may, I apologize for that. I know what you do, and I think
Yep.
this is awesome. And arguably one of the best guests that I've ever had to date, because this is great. You touched upon the Exit Planning Institute of Philadelphia,
Yep.
and which really leads itself to a couple topics that are related to each other. Okay, retirement planning for a business owner is vastly different than retirement planning for an individual.
Absolutely.
Because you are the business. The business is you. Without you, the business has a lot less value. And so therefore, exit planning takes on two components. I always jokingly say it, but damn it, it's the truth. You got the voluntary exit and the involuntary exit. Joe, I don't know about you.
No, I'm choosing the voluntary. Right?
I'm choosing the voluntary.
Sure,
We all know
sure.
what I mean by involuntary is death or permanent disability.
Sure.
So let's go with the voluntary because that's a much better one. So as a business owner, I know I'm established as an S-corp. Okay, I know that in our industry, at a dime, I could sell my business.
Yep.
And to your point, I'm in the same boat.
Yes.
My business represents the majority of my
your
net
wealth.
worth.
Sure.
And so then it becomes a question of either monetizing your business or an exit strategy. Now, in my particular instance, what I'm doing is I'm slowly monetizing my business by passing the shares down to the younger generation.
Sure.
And as you know, I got a bunch of young kids
Yep.
running around here.
Yep.
I call them young kids. If they're younger than my children,
They're young
kids.
kids.
Okay, but be it is, and so the alternative could be I could sell my business.
Sure.
And I know that I can get a pretty penny for my business
Yep.
the way it's structured. How is it working in your world? Because yours is a service, but it's service / manufacturing.
Yeah. So it's mostly manufacturing. So we're 80% manufacturing, 20% service. We're running new separate P&L now for the service side. So I would say I focus 30 to 40% of my time thinking about this because I'm 50 years old now. And I don't know if it's when I hit 50 last year, but I have partners, they're 60. And so we had a very frank conversation that said, hey, how long do you want to be in the business? Oh, 3 or 4 years. How long do you want to be in the business? 7 to 10 years. Okay, we have an issue, right? So at some point there's going to be a buyout of my partners, and we're working through some of those conversations now. We've brought in a team of people. I have an advisory board now, which I've established. So we meet quarterly, and right now we're meeting bi-monthly. So our advisory board helps us grow our business, but also talk about strategy of how an exit would look, right? And how do you backfill those key roles? When an owner leaves, it leaves a void, right? So you need to backfill those. And how are we running financial models to finance a buyout at some point, right? So there's all of this conversation. And then once that happens, then how does that affect me from a tax perspective? How does it affect them from a tax perspective, right? Just a buyout at some point for them creates a tax situation. So we're working with our CPA, with our CFO, and with our advisors and with their, they have their wealth advisors,
Sure.
their financial planning team, working together to say, okay, should we trigger a buyout at some time? What does that look like? How does that get paid out to avoid certain amount of tax, right? Is there capital gains? Is there not capital gains? Is it income?
Yep.
Right? All of these
Of course.
conversations,
Oh, yeah.
right? So it's really, it's somewhat complicated. If you don't have a good team, it could implode, and you could pay way more than you need to, right?
Not even implode, but can be done more efficiently. And do not underestimate the impact of taxes, because doing it right, doing it more efficiently can literally be the difference of a $15 or $20 million business of $2 to $5 million in taxes.
Yes, which is game changing, right? So, and it could change a timeline for years, because you're trying to, if I'm looking at $5 million in a tax burden, that changes the timeline, right, of when somebody would be able to retire. So it's very different than, like you said, a corporate employee that has worked for a company for 35 years, has a 401k or a pension, if some of them still have, or both, and they say at 63 I retire. I have my Medicare. There's all kinds of strategies for that type of employee or that type of person. That doesn't work for me, right? So I have to think about EBITDA, right? So my number all the time is EBITDA, our earnings before interest, depreciation, taxes, amortization. Right. So what is our EBITDA? What is the value of this company worth is a multiple of that EBITDA,
correct?
Right? And, I'm always strategizing that. I'm not selling the business tomorrow. I'm probably going to be in this company for another 10 years. But if I'm going to go buy a company, I'm going to need to prove to the bank that my EBITDA can support a purchase of another company, right? Or combined EBITDA of the new company and my company. So I'm running it they say you should run a business like you're selling it tomorrow, right? Always have it prepared to sell. Mm-hmm. That means you're running a solid financial business.
That's correct.
Right? Your balance sheet, your P&L, your statement of cash flow, they are tight. So I wish I learned. I listened to my accounting professor in college. I wish I listened more then. I could care less about finance. I wanted to be a woodworker, right? Now, come full circle 30 years later, I'm like, I am getting an MBA basically by going to conferences every day on finance, right? Because that's really what business is. It's dollars and cents.
It absolutely is. And the thing is that the difference between learning it in the classroom and learning it now, and this is true, is you learn it in the classroom because you have to. You're learning it now because you want to and you really need to.
And I was in an all-day training in Philadelphia yesterday, and it was I'm in a group called EO, Philadelphia Entrepreneur Organization. Mm-hmm. So another shout out to a small organization where it's like-minded people in a room, and you share best practices, you share knowledge. We brought in a CFO from Alabama to talk to us about how to really look at our financials, how to look at our balance sheet, really isolate things. She taught me something on a balance sheet yesterday that was look for the dead bodies. I said, what the hell does that mean? If something is not moving on your balance sheet from month to month, that's a problem, right? And that's what banks are looking at. That's what financial people are looking at. If you're not seeing movement on that balance sheet going down or up, depending on
Give me an example.
Like accrued revenue that is not changing. Do you have bad debts on? Are you not collecting? What is your so you can look at those financial statements and really drive back into the business for efficiency and say and that's again what we're trying to do is get better and better from the financial perspective. And I didn't do that for so long, right? So if I tell young entrepreneurs now, learn finance early on. Right? Guys are like, oh, I love woodworking. I love it. I'm passionate. I said, well, get passionate about the finance of the business as well, because that's what's going to change your life.
Well, the good news is that around here, we're all passionate about the finance anyway.
But again, if I came in here 20 years ago, I'd be like, Michael, I don't want to talk about it. I'm going to go back and build some cool stuff.
Right. Trust me. I get it. And it's kind of an evolution and a growth that, you're 50 years old now. Be thankful that you have that passion and understanding of which you're hungry and you're growing and you always learn more. But be thankful that you did this at 50 and not 60. And trust me when I tell you, we come across enough business owners who are 60 or 65 and haven't even thought about it.
And I ran into some of them, and some of them found out later, and they basically said to me the same thing I'm saying to some young guys: do it now, do it before you need to do it, because all of a sudden your exit value in 10 years is way different, right? Your multiple, right? What I know based on my industry is that multiples of sale price of the multiple of EBITDA goes up exponentially as you grow your EBITDA, right? A $2 million EBITDA business might trade for 3 or 4x, and a $5 million EBITDA business might trade for 7 or 10x, right? So the value is massive, right? So I'm really thinking about it differently now, right? How do I strategize this? And that was I have a mentor. I tell people you should consider a mentor somebody that, and I'm now mentoring other young men and women in business. A mentor can help you look, somebody that's exited and said, these are the things I did.
Right and wrong.
Correct. And so, and then that comes into the estate planning thing, right? You know, what does my estate look like in 10 years when I'm retiring? Do I really want to fully retire? Do I want to stay on as the CEO with the new company? Should I sell it? Right? There's all of these questions. Do I want to go into consulting? Probably that's my move. I enjoy that. And then I have these conversations with my children. You know, like I have 2 kids. They're adults now, but we're starting to talk about the estate. Right?
Do they have any interest in being part of the business?
I was very clear with my kids, and my partners were clear with their kids that there was going to be no involvement with the family. You know, that caused challenges in the business a little bit because not everybody agrees with that concept. But I have seen some families really get destroyed by, you know, second gen coming in and one of them taking it over and the other should have, and there was nepotism and the business starts to really suffer. So neither of my kids really showed much interest in it, and you know, they'll obviously get the benefit of it at some point in the future.
Let me ask you the next question, and this will be the last one. We talked about the voluntary exit. What about the involuntary?
Yeah, I'm more concerned about that now as I've eclipsed 50, and I do have to be concerned. My partner and I have a buy-sell agreement. We've got buy-sell insurance. Mm-hmm. I have to really think about that. One, when he retires, and I don't have that backup plan any longer. I do have a COO, but that he's not an owner. He's got some phantom stock, but he's not an owner. So I need to really start planning for the involuntary exit.
The what ifs.
Yeah. I have a fair amount of insurance on myself, but I don't think it's going to cover. I mean, should I suddenly die, and it could put the business in a precarious situation.
Well, and the other thing too is that it also would devalue the business. Like, for instance, if I died, a lot of the value of the business is tied to my being the CEO, and
correct. Right.
And that's also part of what I would characterize as increasing the value of the business. The business is at its greatest value when it needs me the least.
Correct. And the entrepreneurs I've talked to and I've been surrounding myself with have said, you need to build that leadership team rock solid so you can take yourself out for a month and it can continue to run without you.
Yep.
And I currently can't do that. And I have a good staff and a good team, but now I'm investing back to the investment portion. I'm going to invest in training of that team, bringing their skill level up from a leadership perspective. They know their task. They know their role in the business, but it's the leadership aspect. How do we get them to work as a team together to really be able to run that company without me and my partner there?
Yeah. This is, you know what, we're out of time already, and this has just been an absolute, I could sit with you on the side for hours and talk about this stuff.
It's interesting stuff. I really enjoy this. Yeah.
Well, and we have very much similarities. I could take a look at my brother's business, who as a business is a lot similar to yours in size and what you do and things along that nature, because you're manufacturing cabinets, custom cabinets. He's manufacturing custom granite. Mm-hmm. And also custom kitchens, but
Sure.
that's kind of part of it all.
But your business as well, Michael. I mean, you have a team here that you need to upskill. So, God forbid you get hit by a bus, it still operates.
The proverbial bus.
Right,
That's correct.
right.
Hey, Joe, do me a favor. Since we're out of time here, I'd like to do, because you've done such a great job, why don't you just look into the camera and just tell people how they can get a hold of you if the type of work that you do, or if they're a business owner who has a similar business looking to potentially sell.
So we are always looking to partner with trade professionals throughout the country. We sell to custom home builders, interior designers, kitchen designers, and architects, and we also sell a portion of our business. About 10% of our business is directly to the retail client. Reach out to us. We have a very strong Instagram following. That's Village_Handcrafted. Our website, villagehandcrafted.com. We're on YouTube and on Facebook, and we'll put our phone number up there for anybody that wants to reach out and try to contact us. Thank you, Michael.
Excellent, Joe.
It's been a great time.
Thank you very much for joining. I think this was a terrific, different spin to a lot of the stuff that we've been doing, is to literally have a business owner in here talking about a lot of the stuff that I think about every day. And most business owners will think about or are thinking about it. And gosh darn it, if they're not thinking about it, they need to be. So this is probably a couple of the best episodes that we've ever done with a business owner. And Joe, I thank you for that. So I hope you all learned something, and I look forward to seeing you on our next episode of Financial Planning Explained. Thank you again. Have a wonderful day.
Thank you.
Thank you for watching this episode of Financial Planning Explained. We strive to provide an educational experience for all of our viewers, and what we struggle with at times is topics. So if there's an idea or a topic that you would like for us to discuss on a future episode, please email us at admin@maaplanning.com, or you may enter it on the Contact Us page on our website at www.maaplanning.com. Thank you in advance for participating and helping make our show successful.